Hello, in this lecture we will be taking a look at Chapter 1, Accounting Information Systems and Firm Value. So we will start off with the accountants as business analysis. So increasingly the role of an accountant is to help address business opportunities. To address such business opportunities, the accountants need to decide what information is needed, then build an information system to gather the necessary information, and finally analyze that information to offer helpful advice to management. So notice that the process of gathering data and making decisions, basically making reports, is increasing the role of accounting in a lot of ways because the accountant is often involved in the accumulation of that data. And there's often more and more data these days that needs to be compiled, stored, computed, and reports being built on it so that we can make relevant decisions. So accounting information system. An accounting information system is defined as a system that records, processes, and reports on transactions to provide financial and non-financial information to make decisions and have appropriate levels of internal controls. So let's break that down a bit. So we're talking about the accounting information system is defined as a system that records, processes, and reports. So that would be, you could think of the classic financial types of reporting. We're recording the financial transactions, we're going to process those, and we're going to create reports on them, on transactions to provide financial and non-financial. So more and more these days the database program will start to accumulate reports and compile data that will not just be financial, and we'll need to compile that data as well. It's also used for the internal controls. The major internal control that we often think of, the first one is separation of duties or segregation of duties, meaning we don't want the same individual to be involved of two different types of transactions that could be related and could make it easier for theft or fraud to occur within an organization, and those internal controls need to be implemented into the accounting information system. So an accounting information system is important because it provides information that companies are required to have, and also information that can be used to make important decisions. So the information that we're required to have is often financial data if we're a publicly traded company. Have to have the financial statements reported to the public if we're publicly traded. And then the internal data, the stuff that oftentimes may not be financial in nature, can really help on internal analysis for the management. So why study the accounting information system? It's fundamental to accounting. Accounting is an information providing activity. No accountants need to understand how the system that provides that information is designed, how financial information is reported, how information is used to make decisions. So the accountant's going to be more and more involved in the compiling of data, and once again that data could be financial data, but it could be other data other than financial, and it's necessary for the accountant to know how the system works in order to compile this data effectively and be able to generate it and interpret it. So here is a simple information system. So we have the storage, and then we have the input process, the processing, and the output. For example, possible input could be sales at Starbucks, so obviously the sales transactions at the store. Possible storage, database of all sales at Starbucks, the storage of the data in the database. Possible processing, queries of what sells best at night. So we may be questioning not just what sales are, but what sells best in a certain time period. A query being a question we propose to the database giving us a possible output to that query or question that we give to the database, reports of what sells best at night. They give us the report on that. Attributes of useful information. To be useful, information must have these attributes. It's got to be relevant. Information that is capable of making decisions in a decision process. It's got predictable, feedback value, timely. So the data needs to be relevant to us making decisions. And that, of course, does include the timeliness factor, because we don't want the information to be too old in order to make future decisions, because, of course, we're using past data in the current present in order to help make future decisions. And it needs to be reliable information that is free from bias, meaning verifiable, representational faithfulness, and neutrality. So reliable meaning the data, we want to be able to rely on the data. It's got to be correct in its analysis, and unbiased that the data is in there. We want unbiased data that we can then make statistical analysis or some type of analysis on. Data versus information. Data is simply raw facts that describes an event and have little meaning on their own. So data is just the raw information, and really, generally, usually speaking, we need a lot of data in order to find trends, in order to find facts. So data is just going to be the one piece, usually insignificant in and of itself. We need larger amounts of data in order to make decisions. Information is defined as being data organized in a meaningful way to be useful to the user.